Hey guys, it's Carter. Welcome back to the channel. Now in today's video, we are going to be diving in and looking at the top 3 stocks that I am buying this March. Now, I always think it's always smart to go into the month with some sort of strategy, game plan, so we all can make as much money as possible. So we're going to be talking about the top 3 companies that I am buying. So I hope you guys all enjoy it. If you have any questions, let me know down in the comments. So guys, let's jump into it. All right, so moving on to stock number 1. Stock number 1 is ticker symbol AMD, also known as Advanced Micro Devices. This is a company that's in a high growth sector. This company makes computer parts, graphics cards, all that good stuff, and is heavily invested into AI and software. And I definitely think, are we getting more dependent on technology or less dependent? I think we're getting more and more dependent on technology each and every way, especially with the rise of open AI, with ChatGPT, with the metaverse. I think we are on a surge of technology, and AMD is going to be a crucial part in that because they make computer parts and technology. And with that being said, their revenue is up quite a bit. The revenue is up a whopping 16% plus a beat earnings, which is awesome. So anytime you have a good revenue, increasing profit margins, all of that good stuff, that's a good sign for a healthy company to continue to grow. Not to mention, the average analyst price target for AMD is near and around $93 a share, which is going to give a return of about 11%. So I think that's pretty strong as well. AMD is a great stock to diversify into that tech sector. Over the past couple of years, we've seen a little volatility from it, but that's completely expected from a growth stock. I think the best strategy going forward would be to continue to dollar cost average, so invest weekly, monthly into this company so you can get a good average price for your share. All right, moving on to stock number 2. Stock number 2, I need you to subscribe and like the video right now. Subscribe, like, do what you guys do. All right, thank you. All right, stock number 2 for real is ticker symbol DIS. It's Disney. And I know you might be saying, Carter, Disney's not worth it. The stock's gonna continue to sell off. Hey, I get where you're coming from, but you have to look at all the fundamentals. The fundamentals look fantastic. We've seen a revenue up 7.7%. The net profit margin up 7.5%. And with that being said, Disney Plus is growing at an astonishing rate as well. Also, we've seen a couple of beaten earnings, so they've increased some revenue, beating expectations. But in general, the stock has sold off about 27% just due to the general market conditions we're in right now. So for me, I think Disney's a fantastic pick, for people that want to diversify. Disney itself is the media powerhouse and is not going anywhere anytime soon. It's my number 2 pick and I'm sticking by it. All right, the third and final company that we're going to be covering is ticker symbol AGI. This is Alamos Gold. Now, this is a company that is a gold producer, but one of the reasons why I absolutely love it is looking at the fundamentals, looking at that revenue, the net profit margin. It's great. We've seen huge increases from this. Not to mention they've beaten a ton of earnings, blowing expectations out of the water, which has caused a lot of buying pressure to enter this company. This one here has historically beaten the S&P over the past year, and I think we're going to see some continuation for the next year. People are getting worried about keeping their cash and they're starting to invest in gold, which is why we've seen an increase from this company. Another reason why I absolutely love it is because you'll get that appreciation and you get a dividend of about 10 cents per year. And I know you might be saying, Carter, it's only 10 cents, it's not worth it. Hey, starting out, as a dividend investor or as a investor in general, these dividends are going to start small and compound on itself, and it will add up to thousands of dollars over the course of the long run. So just make sure you guys just have a long-term outlook and understand that these 10-cent dividends are small now, but you have to look in the future. The dividend is near and around 1%, which is actually pretty decent for a company like this. Also, looking at the technical analysis, looking at the stock chart, you'll notice anytime the stock is sold off below 10 bucks, it always had a good opportunity to see a bounce back up. So this classifies it underneath $10, has some sort of support line. So this one here is a little more of a stable company comparing to the rest of them that we covered today, but it's always smart. Do your own research before you guys invest. This is just my opinion. So guys, I hope you guys enjoyed it. We'll see you guys later. Remember to stay happy, stay positive, and stay safe. Take care, everyone.